ETFs that own foreign stocks have been vacuuming in money. They've gathered over $100 billion in assets thus far in 2021. Demand has been brisk. So what are the trends behind that demand, and how can you participate in the upside? Kevin Carter, the founder at EMQQ, joins us right after this. I'm Ron DeLegge with ETF Guide TV. A cordial welcome to all. If it's your first time here, be sure to hit that subscribe button and never miss any of our timely episodes. Today's focus is on emerging markets, and the timing is really good because countries in this category like China and South Korea and Taiwan have been super hot performers. They've been beating their global peers. Helping us to break that down is Kevin Carter, founder and chief investment officer at EMQQ. Kevin, great to catch up with you. Nice to have you with us.
Thanks, Ron. Glad to be here.
So let's start with the investment thesis behind EMQQ, which combines two of the biggest trends of our lifetime. We've got emerging markets combined with internet and e-commerce. So where did you get the brilliant idea to put these two together?
Well, it happened over a 16-year period. I mean, I got pulled into China about 16 years ago and have been, focused exclusively on China and emerging markets more broadly for 16 years. And very quickly, you learn that the thing that's emerging in emerging markets are the people, right? You've got 85% of the world's people are in emerging markets. Even more of the young people, 90% of people under the age of 30 are in emerging markets. And they're moving on up. Their economies have been growing twice as fast. Their incomes are going up. And all of these billions of people want stuff. They want more and better food, more and better clothing. They want appliances, entertainment, vacations, cars, and they want their kids to go to college. And that's the story. And I didn't have to figure that out. It was very well documented. And so all I really done for 16 years is to, increase the exposure to the emerging market consumer story and then battle the real problem with the traditional indexes, which is the legacy economy and the government-owned banks and oil companies that dominate the indexes. And after about 8 years, I concluded that investors should just leave everything else out and focus on just the consumer sector. And I used to tell people when they would ask me, what's the best emerging markets ETF to buy? I always told them to buy the emerging market consumer ETF that has the ticker symbol ECON, because that was really what you wanted. And I had nothing to do with that ETF, but I knew it existed. And it was about 8 years ago that I, in my own portfolio, I had reviewed the stocks that I owned personally, all of which were, meant to be catching exposure to the growth of the emerging market consumer. And I had 5 stocks. 3 of the stocks were in the emerging market consumer ETF. Those 3 stocks were Chinese food companies and clothing companies trading in Hong Kong. But then I had 2 other Chinese companies or 2 other emerging market companies that I invested in that were clearly part of the consumer story, but they weren't called consumer stocks. They were put in a different box called technology. And those 2 companies, one traded on the New York Stock Exchange as Wu Ba, the Craigslist of China, and the 5th one, Mercado Libre, which is the Amazon.com of Brazil, trading on the NASDAQ. And after I looked at my portfolio that morning, I thought, all of these are consumer stocks, but only 3 of them are called consumer stocks. And the 3 that are called consumer stocks are great. They're growing at 15% and they're profitable. But then I looked at the 2 internet companies and they were growing at 100%. 7 times as fast, and had incredible margins. And while the PEs were a little higher, the PE versus the growth rate, the PEG ratio was reasonable. And I just remember thinking the 2 best emerging market consumer stocks I own aren't even called that in the database. And literally about 3 hours later, my phone rang, and it was a friend of mine with a 3-year-old daughter. And she said, what's the best emerging markets ETF for my daughter's college fund? I started to tell her to buy the emerging market consumer ETF, but then I had this light bulb moment, and I remembered earlier in the day, and I said, wait a minute, the best one doesn't exist. And I literally turned around and went back to my office that day and started to organize EMQQ, and it launched 3 months later. So that was that was the inspiration. I was trying to get, the best. Well, what was the best answer to that question? What's the best long-term investment for emerging markets investors? And it really isn't that complicated. I mean, even 8 years ago, when you turned on CNBC every quarter, you'd see here are the FANG stocks that are eating the world, and then here's all the traditional consumer companies that are going to go bankrupt. So it was the same idea, just for the rest of the world.
Now let's talk about performance, because EMQQ has been one of the best performing emerging markets ETFs over the past 1, 3, and 5 years. And that's pretty impressive feat. So help us understand some of the drivers behind that performance. You sort of alluded to it, but tell us a little bit more about some of the underlying holdings inside EMQQ.
Well, let me tell you first, the three underlying trends that really underlie, are the basis for EMQQ, and then I'll talk about some of the companies. But, this wasn't as clear to me 8 years ago. I could see the incredible growth rates and the margins, and I could see these were clearly consumer companies, ultimately. But really, what's happening is that there's three mega trends in the story. The first one is billions of people becoming consumers in the developing world. Now, the second trend is all of these things we take for granted. The second trend is called the computer, right? I've had a computer for 30 years, but the reality is most of the world has never had a computer, and the most of the world is getting their first computer basically today, and it's not on their desk, and it never will be. It's a $60 smartphone running on Android. And as you mentioned earlier, it comes with the third mega trend, which is called the internet, which is, again, something I've had for 25 years here in San Francisco, first over telephone lines and then cable. Now it just shows up in my pocket, but most of the rest of the world never got wired. So you're giving all these billions of people their first computer and their first internet access. And importantly, and additionally, because the consumption infrastructure in the emerging markets is by definition underdeveloped. And when I say consumption infrastructure, I'm talking about bank accounts with debit cards. I'm talking about TVs on the wall with 1,000 channels. And I'm talking about Target stores. Because those things don't exist, all of these billions of consumers in emerging markets are leapfrogging to the cutting edge of consumption, and in many ways are significantly more digitized than we are. So those are the trends that are creating the incredible growth in the sector. And in terms of the companies, Alibaba is the best known, the Chinese e-commerce giant, which was the largest IPO ever in the United States. So that's the poster child for our company. Tencent, the other Chinese super app, which owns the social network of China, WeChat, the Facebook of China, is the other largest holding. But it's companies like Mercado Libre, which again is the e-commerce leader in Brazil and Mexico, and Yandex in Russia, which is both the Uber of Russia and the Google of Russia. We own the Nigerian e-commerce leader, the Amazon.com of Africa, Jumia, which trades on the New York Stock Exchange. So it's the same kind of things that we have here, the FANG stocks, but the localized versions all over the world.
Well, I got to talk to you about Dr. Burton Malkiel. He's a Princeton economist, best-selling author of A Random Walk Down Wall Street. Great book. If you haven't had a chance, those viewers that are watching this show, pick up a copy. And he's just an all-around legendary figure. So besides all of that, he's also a member of your indexing committee. So tell us a little bit more about having Dr. Malkiel on your team and how it's been working with him.
Quite ironically, Burton and I met in 1998 when I was a young, cocky value investor and I was shorting Amazon.com, and I lost about a third of my net worth. And the same day that I lost a lot of my money shorting Amazon, I saw a company change its name from KTEL to KTEL.com. And I said, oh my goodness, I've read about this. Because when the company changed its name from KTEL to KTEL.com, the stock went from $1 to $35 a share. And I said, I've seen this somewhere. And I found my copy of A Random Walk Down Wall Street, which was the first book I read after college. And there's a chapter about bubbles and a quote from Jack Dreyfus about the 1960s electronics bubble. and companies changing their names by adding the words electronic and silicon into the name. And I said, oh my goodness, this is happening right now with these .coms. And I said, I have to call this guy. And I picked up the phone and I dialed his Princeton office thinking I'd get a secretary, and he answered the phone. And one thing led to another, and we've now been business partners for 22 years. So he's been part of my efforts. We've collaborated for 2 decades now. He's the one that dragged me into China, by the way. When Google went public, Burton and I were already working together, and they asked Burton to give a talk to the Google employees about investing before the IPO. And a few months later, some guy at Googled me up and called me and convinced me to become his investment advisor, and a few other of his Google friends. And meanwhile, Burton was going back and forth to China, and a couple of his Princeton economist colleagues were Chinese nationals and returned to teach economics in Beijing. And they had convinced him that something big was happening and he had to come see it. And after he went back and forth a few times, they wrote a paper about investing in China. And the Google people found out about it and called me and said, hey, can Burton come talk about China? And I said, sure, next time he's in San Francisco, we'll come down. And 16 years ago, last month, Burton and I drove to Mountain View from San Francisco, and Burton gave a talk about China, and all these people at Google looked at me and said, we want to invest in China. And now I've got a Chinese door behind me, Ron, and all I've done for 16 years is try to figure out what does that even mean to invest in China, and how do you best do it? So he's part of our index committee, but he's been part of my professional life for 20 something years. And he's an amazing human and a wonderful, just brilliant and kind human.
Now, one final thing before you take off, Kevin, many investors or advisors may already have a built investment portfolio that they're managing. So how would an ETF like EMQQ fit into the overall portfolio?
Well, Ron, I'm obviously biased about this, and I am admittedly someone who's become pretty radicalized in my thinking about traditional approaches to investing and modern portfolio theory, and making a pie chart, an asset allocation in particular. And so, if I was trying to say something that sounded like what most advisors usually are going to hear, I'd say use it as part of your emerging market allocation, right? Maybe use one of the broad emerging markets ETFs as your core and use this as a satellite. But I don't really feel that way anymore. And I don't say it either because I don't really believe that. I think some advisors and investors will want to use a Vanguard or iShares core, but I think you'll have more money in 5 or 10 years if you just focus on this sector. And I think, again, if I put on my not the way people want to hear it, I've rethought everything about asset allocation. This is where the growth is. And I'm very confident this is the fastest growing sector in the world, not just today, but ever. And I think that investors that have 5 years or more, and especially investors that have 10 or 20 years, I think this should be a major part of your allocation. I don't think it should be a part of an emerging markets allocation. I think it's as far as I can tell, the best long-term growth story on the planet today that I'm aware of. So I'd say you should have some exposure to this if you want growth.
Well, the numbers don't lie, and certainly there's a strong case to be made for that. Thank you so much, Kevin, for your insights. Keep up the good work, and we look forward to having you back.
Thanks, Ron.
I hope you've enjoyed today's focus on emerging markets and the ETF trends. To play it, check out EMQQ. Post your comments below. We'd love to hear from you. I'm Ron DeLegge with ETF Guide TV. Thanks for watching. We'll catch you next time.